Good morning, everybody. Hope you had a good night, ready for another trading day. So far pre-market, we've had Dick's Sporting Goods report earnings. They beat on the top line, they beat on the bottom line, and the stock still went down 13%. It went down 13% because they gave a guidance that was weaker than expected. They're expecting a decline in sales. So it made me think about something that I feel like I need to explain to some people. One of the things that has happened over the last, I'm going to say 2 years, is the companies, the retailers in 2020, when everything began to shut down, when shipments stopped flowing from China and from other countries, inventory levels came down. And what you saw was you'd go into stores and you'd see empty shelves. People started panicking and they started buying a lot of things. They started buying more clothes than they needed, more food than they needed. They just started buying things. For one, they had extra money from the money that the government sent out. And the second thing was people were panicking because they didn't know whether we were going to head into a Venezuela type of scenario. Well, all the stores built up their inventory, and in 2021, everybody bought all that inventory. So what you saw in the market, if you went into a Walmart, if you went to a Target, you probably saw stores that looked like this. You saw stores that had merchandise on the shelves. The clothes were nicely folded, and you'd go in there, select your merchandise, go to the register, wait in their long lines, and walk out. Well, this is a good scenario for everybody, but now with all this talk about recession and gloom and doom, the consumer also looks forward. And interesting thing in economics, people's perception of the future is directly correlated to what's happening today. So if today all you hear in the news is recession, if all you hear in the news is the economy's bad, people don't buy as much. Well, Walmart, Target, Dick's, they didn't know that all this talk was going to go out. They were still trying to make up for low inventories, and they overordered. Walmart, on their last earnings report, reported that they had 45% more inventory than last year. Target reported that they had 32% more inventory than last year. Dick's today reported they had 30% more inventory than last year. This increased inventory causes a lot of things. For one, it makes it more difficult to work, but it also increases your expenses because you have to move that inventory around. Just to even move around in the warehouse in the back. If you guys have never been to a Walmart warehouse, it's pretty cramped in there. And the more merchandise you have, the tougher it is to get what you actually need on the sales floor. So Walmart had an increased operating expense of 7%. Target had 8% increased operating expense. You have companies like Lowe's or Kohl's that had a 12% operating expense increase. A lot of these operating expenses are fuel, but a lot of it is also extra manpower from having to deal with these excess inventory levels. So what I'm getting at is this isn't just a stock market correction. The retailers are also correcting in the sense that what you're going to see this coming summer, and this is coming from somebody that worked at Walmart for 15 years and managed 8 stores, was the most stores I managed. But what you're going to see is what I remember from Walmart when I was there in the early 2000s after the .com crashes. This is what the stores are going to look like. They need to clear out this excess inventory. All this needs to come out of the store because next season's merchandise is already on the way. And here's the reason I'm bringing this up. Inflation is caused because everybody reports their sales every quarter. They report their cost and they report their sales. So now what you're going to see, or what you have seen in the last 2 years, is the retailers have been getting their merchandise in and selling everything at regular retail price. They haven't had clearance. So everything's selling at regular price. Now what you're going to see is a lot of clearance racks. You'll start seeing them this summer if you're not seeing them already in your local Walmart. But you'll see them at Target, you'll see them at Dick's. And this is going to bring prices down of general merchandise. This isn't going to bring down prices of groceries. Grocery prices will stay the same. But then you have all this other merchandise that will go on clearance, which will lower the overall retail prices, which in turn looks on a report like inflation is coming down. Now, you and me both know that the regular manufacturer suggested price will be the same, but there will be more clearance merchandise, and it's going to make inflation look like it's going down. And the only reason I'm saying this is because, as bad as it sounds, there is light at the end of the tunnel. You have Walmart coming down. Look at this vicious drop after they reported earnings. Now let me remind you, Walmart beat earnings. They beat the top line. They beat the bottom line. The only reason they went down is because they said the consumer is slowing down. Now Target did miss earnings, and they had just as bad of a drop, and they haven't bounced back up because they did miss earnings. Walmart started to rebound because they have proven over and over that they are a safety position. When times are bad, you buy Walmart stock because you know that Walmart's going to succeed when times are bad. Target hasn't rebounded. It still looks like it's going down. It hasn't made a higher low. And then today you had Dick's Sporting Goods, 13% drop after they reported. We'll see how that goes. But when you control inventory levels and you don't have a lot of clearance, you get Best Buy. Best Buy didn't drop nearly as much as the other retailers. They still dropped, and it was based on outlook, but they beat the top line. They beat the bottom line. Their inventories were only up 9%, which isn't a lot. Their operating costs were actually down 5%. So they're outperforming. They planned better. I think that Best Buy understood more that times were changing, and they planned a little bit better. But again, the only reason I'm bringing this up is because there does look like this right here is going to be one of the causes of inflation coming back down to earth. We haven't seen clearance racks at Walmart. We've been seeing maybe one rack in the back. I know because I like clearance racks. I destroy my clothes, so I always buy off the clearance rack. And we haven't been seeing these clearance racks. So these are going to come back here probably over the summer. And that's actually a sign that these stores had too high inventory levels. And when these clearance signs go up, inflation's gonna melt down slowly. And then the Fed won't hike interest rates, which means bond yields will change, which means the stock market will continue on its bull run. That's all I had today. I hope you find this informative. I hope that you get something out of this, and at the very least, I hope it makes you ask me questions on the Discord so that we could explore it more. And if you have information that you think I'd like to hear, by all means, let me know on the Discord, and we'll go from there. Have a great day, and we will see you on the Discord.